Good morning and welcome to another week in the markets. I'm Keith Fitz-Gerald. Thanks for joining me with today's 5 with Fitz. Here's the deal. There are three big market movers on deck this week, each of which I alluded to in yesterday's short. And I'll have more on all three of them here in a minute. But the thing I want you to think about this week, no matter what happens with the markets, is to stay focused. The game that we're tracking, the themes that we're following are still very early innings. Now, what's more, and the thing that's important to think about is that there are still trillions of dollars that have yet to get back on board in the market after getting scared out of the proverbial water in April. And that in turn means that FOMO, fear of missing out, isn't far behind. Now, case in point, the S&P 500 has already risen 18.53% off of those April lows. And many of the stocks we talk about regularly have done considerably better, which is why, not for nothing, we focus on them. Now, OBAers know exactly what I'm talking about, and grinning is absolutely encouraged, by the way, if you're watching this. I've been doing this a long time, and if there's one lesson that I have learned, and it surfaces over and over and over again during event-driven markets like the ones we're living through right now, it's this. Chaos creates opportunity. And the more the former there is, the more the latter you have. So we're living through a pivotal point in human history, which means that the profit potential up for grabs is correspondingly much larger, much more pronounced, and much more sustainable than many people expect. Now, I know that it's hard to imagine, and it's very tempting to dismiss what I'm saying. But to do so is, I submit, potentially one of the single biggest and most expensive mistakes an investor could ever make. So, don't make that mistake. Take a look, by the way, in the written version of the 5 with Fitz today. You'll see something called the sixth wave. That's where we are. We're on the cusp of the sixth wave. It'll really put what I've just said into context. Meanwhile, here's my playbook. Numbers 1, 2, and 3 all at once today. There are three big potential market movers on deck this week, and the super savvy Stuart Varney kindly asked me back to his show ahead of today's opening bell for a brief discussion about all of them, how investors should be preparing for them, and what I see happening. There's three of them. Number one, Apple's development conference. Number two, China talks in London. And number three, why I bought more Tesla and hope the heck I'm not going to live to regret it. Now, hopefully you'll find my perspective helpful. You can watch that video elsewhere on my channel. By the way, I will have considerably more discussion about all three of those things in today's OBA update later this morning, so please keep an eye on your email. Meanwhile, I'm actually going to cut it a little short today, the 5 with Fitz that is, because I want to catch Apple CEO Tim Cook's opening remarks at the WWDC, their development conference, their worldwide developer conference. Now, you can too using a link that I put into today's 5 with Fitz if you want. I would encourage you to watch it because I think Apple is very effective when it's very quiet and people have written it off. They continually change the world, and I think we're going to see the precursors to doing that again today. Number 4, this is a big one. Headlines say trade. But what's happening in London is about control over the 21st century. U.S.-China talks are back on, this time in London, backed by a 90-day tariff truce. U.S. duties cut from 145% to 30%. China's cut them from 125% to 10%. The headlines say trade, but make no bones about it. The real fight is over AI, tech, defense, and global control over the 21st century economy. This is an amateur hour. This is for all the marbles. Now, the reason I bring this up is that smart investors aren't waiting, right? Being cautious is great, but being profitable is even better. Always better for that matter. Now, waiting for confirmation or being on the sidelines until the smoke clears is something that a lot of people want to do, and it may seem like a smart move. But in plain English, that's a lot like bringing marshmallows to a campfire when it's already gone out and the gang's already in their tents for the evening. What you want to do instead, I submit, is be sitting down before they, China and the U.S., make nicety nights and light the kindling. This market will likely be gone like a rocket when that happens. And if you're on the sidelines, you're going to miss the lion's share of the next big run higher. And finally, number 5 today, cable TV is crumbling faster than a rusty satellite dish. I can only shake my head. I mean, this is amazing. Every time I see it, I just want to shake my head more. Warner Brothers Discovery is breaking itself into two. One company for streaming and studios, think HBO Max and the movie empire, and another for global networks like CNN, TNT Sports, and Discovery. Now, CEO David Zaslav will stick with the streaming side, while CFO Gunnar Wiedenfels takes the reins of the legacy network biz. Now, there's no other way to say this, folks. They may as well be rearranging the deck chairs on the Titanic, in my opinion. Linear TV is fading. Bundling is back. Streaming isn't the golden goose Wall Street once hoped for. Content is expensive. Subscribers are fickle. And investors want cash flow, not just Emmy trophies. Now, I think that the split might buy time, but it's not going to buy the new business model, which is desperately needed here. It's merely something new for Wall Street to chew on. So don't make the mistake of thinking it's something new. Meanwhile, Netflix is a study in contrast. It isn't just surviving, it's rewriting the rules. Now, I don't own Netflix stock, full disclosure, and probably won't because I'm in hot pursuit of stocks that I believe have considerably more upside ahead, but don't let that stop you if it fits with your personal risk tolerance, objectives, and circumstances, which I don't know. Trade idea here, is pretty darn simple. Consider shorting or put skis anytime WBD bounces because I think the breakup's going to unlock a lot of value for the sellers. Meanwhile, buy Netflix if you don't own it or think about it anyway, which actually seems to have its act together. Leap's calls could be an interesting move too for a fraction of the price. So today's bottom line, learn to think like a hunter, not the hunted. Your portfolio will thank you. As always, let's make it a great day. Start the week strong. You got this, I promise. And one last thing. In case you missed it or you want to listen again, the fabulous Susie Orman kindly asked me back to her podcast, Women in Money, yesterday. Now, we talked Palantir, Tesla, and what to do with stocks that give you pause. Bottom line, there's always a choice. You got this. Make it a great day. And once again, see you tomorrow. Thanks for your time.